Hello and welcome to Morningstar. I'm Emma Wall and I'm joined today by Justin Onuekwusi, manager of the Legal & General Multi-Index Fund range. Hi Justin.
Hi Emma.
So what's the first fund that you'd like to highlight today?
The first one I'd like to highlight is the Global Real Estate Index Dividend Fund. Bit of a mouthful. But overall, we believe the Fed is likely to err on the side of caution in terms of increasing rates. And that is likely to be a tailwind for US property. Now, 65% of that fund is made up of US property, mainly in commercial property. So we think the Fed be erring on the side of caution, not increasing rates very quickly, should be a tailwind for commercial property, particularly in the US.
And of course, commercial property has been in the news in the last 6 months quite negatively because a lot of UK commercial property funds closed their doors to trading, temporarily suspended trading because of Brexit. Presumably, when you go global with this kind of investment, you don't have that Brexit risk.
Of course, we're investing globally in global real estate securities. We actually do hold some UK property as well to provide some diversification. But I think it's important that, at times of stress, at times of uncertainty, you increase the liquidity in your funds. And that's what we've done over the last year, over the last 18 months for the multi-index strategy.
And what's the second fund that you'd like to highlight today?
The second fund I'd like to highlight is the Legal & General Emerging Market Government Bond Fund. Now, importantly, this is denominated in dollars rather than a local currency. Emerging markets have accumulated FX reserves over time. So compared to where they were when the Asian crisis in the late 90s, they've got a lot more foreign FX, which means that they're unlikely to default on their dollar debt. And with yields of north of 5% in this low yielding world, with low default risk, emerging market debt for us looks particularly attractive.
Now, a lot of emerging market debt did become very popular a few years ago because this hunt for yield that investors in the UK, certainly in developed markets, have. But there seems to be a lot of hot cash going in and out of this sector. How does that affect the returns?
There is a concern of that. I mean, we have seen, again, year to date, we've seen big inflows into emerging market debt because yields are likely to be low for longer. The Fed is erring on the side of caution. You see more stimulus from Japan, Europe, and the UK. But our view is that that's likely to continue. So I do think the hunt for yield will continue. But it's so important to focus on fundamentals. And if you look at fundamentals, the yield pickup you get on emerging market debt for the default risk is particularly attractive.
And what's the third and final fund?
The third and final fund is the Legal & General Global Corporate Bond Fund. And this is invested in the multi-index funds, and it shows that we have flexibility to not be indexed for the sake of it. This is an active strategy, and it really follows a theme that we've had since the start of the multi-index funds to diversify our bond holdings over different geographies, but also over different bond asset classes. Many of our peers and many of our competitors have sold down all of their bonds completely. However, we feel that bonds provide an important role in the portfolio, particularly for the lower risk funds, and therefore we've been unwilling to sell our bonds completely, and we've preferred instead to diversify over the bond spectrum and be active in terms of asset allocation across different bond funds.
And that is a really interesting point because you are known as a passive fund investor, an asset allocator into index strategies, but you're saying here actually you've made the decision that an actively managed fund is the better way to get exposure.
Yeah, importantly, the multi-index funds, they can go active and will go active. If there's an asset class that simply can't be managed on an index basis, we'll go active. And a great example of that is UK commercial property. But also, if we think the market lends itself to active management, global high yield, global corporate bonds, again, we'll go active, and that's something that will continue for the multi-index funds going forward.
Justin, thank you very much.
Thank you.
This is Emma Wall from Morningstar. Thank you for watching.